viewers, we are back again, and today we are going to be looking at accounting for beginners video 2. In our video 1, we were trying to classify D, C, A, D, E. C, L, E, R. We're trying to look at debit, credit, asset, liability, draw, equity, expenses, revenue. Remember, your asset must be equal to liability. Your asset must be equal to liability. That's what you need to know. All your assets must be equal to liability. Take note. Now, let us look at it properly. We have tried to look at this in our previous video, in video 1, and it is, we are going to be looking at a full minute of asset and liability, and of how it is being classified under debit and credit. Now, first of all, let us look at the part of debit. Debit is always found on the left-hand side, while credit is always found on the right-hand side. Take note. Debit, left-hand side, credit, right-hand side. Debit, credit. So your debit is always found on the left hand, while your credit is always found on the right hand. So you should take note about that. Now, first we need to understand what an asset is all about. An asset is a resource with economic value which an individual or a cooperative or a company owns. It is a resource with economic value that an individual, company owns. What are some of the examples of asset? Example of asset, we have cash, we have inventory, we have vehicles, we have furniture, we have building, we have account receivable, those are all examples of asset, which we are talking about liability. Liability are income we owe. Examples of some liability, we can talk of account payable. Account payable and liability. Each time you see the word account payable in any accounting term, you should know we record that under liability. And when you see account receivable, you should know that it is an asset. All account receivable are asset, all account payable are liability. That's what you need to know. Equity. You can also talk about equity, or you can use the word owner's equity. Owner's equity or equity is that amount of income an individual invests in a business, and it is always put under the credit side. Have you seen? And draw is the amount of money removed from a business for personal use. It can be an individual writing a check to withdraw income for himself. That's what is known as draw. Expenses. Expenses are the costs incurred in carrying out business. It can be the cost incurred in sales, can be the cost incurred in sales, cost incurred in purchase, cost incurred in production. All these costs incurred in carrying out business is called expenses. Revenue are the income generated from the business. It can be after sales has been made. So revenues are just income we generate from a business. And it is always recorded under the credit side. So these are some of the assets under the part of credit and debit. We have asset, draw, expenses. Under the part of credit, we have liability, equity, revenue. That's under the credit side. So asset must be equal to liability. Debit must be equal to credit. So you get to know that in your brain. Debit equal to credit, asset equal to liability. After we have known that, the next that we need to know is that the expenses and the revenue form what is known as the income statement. Expenses, revenue form the income statement. These two form the income statement. Why in this, we also have our balance sheet where we have the asset and the liability plus equity. Asset is equal to liability plus equity. This forms our balance sheet. Remember, all credit, right hand side, debit, left hand side. Viewers, hope you enjoyed our video. Don't forget to subscribe, share our videos, and hope to see you in our video 3 where we are going to be putting journal entries. Bye.